Hello everyone, a very good morning, good afternoon and good evening to all of the viewers from around the world. This is your host Vaibhav. In today's session of JForex Indicators Explained, we will be looking at the concept, the properties, the uses of a very interesting indicator. The name of the indicator is volume oscillator, and from the name you can make a guess that this is the indicator which is going to give you the idea of the momentum in the volume. It is not going to be helpful for figuring out the direction of the underlying instrument, whether you are trading in a forex, commodities, or the equity segment of the market. But you can look at the momentum of the volume, whether there is the fact that price action is being backed by a significant amount of interest by the market participants or not. You can easily figure it out using this indicator, and then using the relative data, whether the market participants in interest is increasing or decreasing, or whether it is above average or below average. You can take that into consideration and then figure out the opportunities to trade, whether you want to sit on the sidelines or whether you want to be one of the active participants in the market. That's up to you, and that is something which can be helped with. You can spot the opportunities while looking for the optimum trades using this indicator. So let us now head to the F4X4, the newly released trading platform from the Dukascopy Bank SA. This is the Euro USD chart drawn on the hourly time frame, and here we have the Euro USD chart plotted on the candle period of 1 hour each. And for you to know where this indicator is listed, all you have to do is opt for one of the option, F3 or F4. You go to this option, and there you will find this indicator listed, volume indicator. Here it comes, volume oscillator. Or to make things simple, you can simply type in the oscillator, and all types of oscillators will appear, and you just have to pick this one, volume oscillator. All right, now here if you notice, we have to define two parameters, 5 and 10, and that is simply the candle period, the calculation period for defining the fast and the slow moving average of the volume. So you have to figure out these two components first. So whatever is the average volume over last 5 candle periods, that is calculated first, and then we calculate the volume over last 10 candle periods and then average it out. So we have these two averages of the volume over two different time periods, and the one with the lower calculation period is considered fast, one with the higher calculation period is considered slow, as there will be a lot more stabilization as it has more data points to cover. And then we take into account the difference between the two. When we have the fast moving average of the volume on the higher side compared to the slow moving average of the volume, we will have a positive difference, as the slow moving average of the volume is deducted from the fast moving average of the volume. And when the faster one is on the higher side, we will have the positive difference, and when the volume, the moving average volume over fast period is lower compared to the slower moving average of the volume, we will have negative reading. So using that reading, then we can figure out what's happening in the market. When we have the reading above zero, that is indicative of the fact that in the near term, over the last few candle periods, whatever is your calculation period over that given time horizon, the average volume has been higher compared to the volume over larger time frame. That means the recent price action is being driven by increased interest by the market participants, and that is something you can then exploit to your advantage. As there is a higher participation by the market forces, you can be more confident of the fact that this price action, the recent price action, whether it is bullish or bearish, is more likely to be sustained in near future, and then you can trade with a lot more confidence in that direction of the price action. So that's how you infer these data points to spot the opportunities developing in the market. And if you have the volume oscillators reading in the negative territory, that simply means in the recent past, over last calculation period, the faster calculation period, the market participants are not that keen to get involved compared to the average volume over the slower calculation period. And that means that the recent price action is not being driven by significant amount of interest by the market participants, and it is better to simply sit on the sidelines, wait for the volume average to increase, and as and when it increases, and depending on the side of the price action, you can then figure out the opportunities to trade. So as I said in my introductory remarks also, this indicator is not really something which you can use to help you in determining the trend or the direction of the trend, but this is the indicator which will give you the idea of the depth of the market, and that is something quite valuable. You can then use this indicator in conjunction with other indicators to figure out the opportunities while collating the price action and the volume data, and using those parameters, then you can spot the opportunities with the higher probability of making money. So that's how these indicators can be utilized. So zero is a very critical line, and then you can also pay attention to the direction of the volume oscillator. If it is rising, I think that is the point where you should be getting involved. And as things start to stabilize, and as the volume average starts to lose steam, maybe that is the time to simply pull back, sit on the sidelines, and allow the market forces to stabilize and pick up again. And as and when that happens, that might be the time to jump in back into the market to take trades in a favorable environment. So that's one of the way you can utilize this indicator. You can always come up with new ways to figure out the opportunity. So I would suggest that you use this oscillator in your own way. You can carry out observations over these larger data points. You can spot the opportunities. You can look for new ways to exploit these indicator for figuring out a system which is going to give you the edge over other traders, and using that, then you can try to make money. So that is something you can use this indicator for, and I'm hopeful you will figure out the ways to profit from this indicator. Now let us see what are the options to customize this indicator for us. We can figure out the customization options so that we can blend in these indicator with our system. Now here the short length and the long length of these indicators parameter to figure out the moving average is 5 and 10. But you can always play around with these combinations. Suppose if you want to increase it for the stabilization factor, if you want to increase it to say for example 14 and 28 or any other combination, and it need not be necessarily in the ratio of 1:2. It's just the case that for comparing these short length and long length, you will have to keep the short length lower and the long length higher or larger. That's the point of it. Otherwise you can go for any combination as per your requirement, as per your choice. So here, as I have increased this calculation period, both the faster and the slower, we have a lot more stabilization in this movement. And as you can notice that the volume picked up here after this Friday's non-farm payroll data release. Then we had this strong move on the lower side, but eventually the volume oscillator tapered off, and then it is picking up again here at around 16 GMT. That's something closer to here, and we are seeing again newer selling pressure coming back into play. So this is an interesting development here. You will have to use other indicators, other parameters to figure out the direction, the trend. But here it is simply telling us the fact that the average involvement of the market participants is now a lot higher compared to what it was earlier in the day. So that is something which we can take into consideration while figuring out the course of action for next couple of hours. So you can go back in time and see what kind of formation has worked most of the time, or more than half of the time. And if that is the case, I think that is something you can then utilize to look for the opportunities in the market. Okay, now again I'm going to go back to the customization options. Let's restore it back to 5 to 10. The output combination, volume oscillator, you can go for different color combination, or you can work with this color combination. You have this choice available to you. The width can be increased or decreased. You can go for higher transparency if you want to decrease the prominence of this indicator on the plotting of the chart. So that is something you can work with. Recalculate on new candle only. If you opt for this option, then in that scenario, it will have the output constant at the current market price. So whatever is the output value of the indicator at the start of the new candle, it will remain constant throughout the that candle period. And as a result of that, even though there is going to be fluctuation in the applied parameters, you will have a stable output for that current candle. So that's the utility of this option. Highlight the time period zone. You can go for the highlighting of the time period zone so that it becomes easier for you to keep in mind what is your horizon of the calculation. Calculate from custom data. The calculation can be customized further. The instrument can be anything from the chart. You can use almost all of these instruments with this indicator, and it will work just fine. So you can use this across the spectrum: commodity, currencies, treasuries, stocks, individual stocks, or indices, equity indices. All these indicators are going to be usable with this indicator. All right. Now coming to the customization. Here you can also customize the candle period. You can use it from the chart, or you can go for the calculation of the indicator independently of the chart. Suppose, for example, you want the indicator's calculation to be dependent on the candle period being half an hourly, even though the chart candle period is hourly, or for that matter 5 minutes. You can customize these indicators in such a way as well. Here this oscillator, volume oscillator, is being derived using the candle period of half an hour each for the calculation period of 5 and 10 respectively. Now I will restore it back to use from the chart. Spread, ask or bid, you will have slight difference, but more or less the trajectory is going to be similar. If you want the indicator to be available on all the periods, you can opt for this option as well. So you have this option where you can go for the availability of the indicator on only chosen time frames. Now that we have opted for 5 minutes and hourly, we have this indicator available on 5 minutes and hourly only. And if I say change it to 30 minutes, then we won't have any plotting of the indicator on 30 minutes. So that is something we have to work with. And this particular property is helpful when we want to use multiple indicators on different time frame. So for that purpose, to have multiple indicators working for different time frame, we can go for this kind of setup. Base period, day, none, 4 hours, or weekly. We have all these options available to us. But as we are noticing from the plotting of the indicator, it is not really impacting the indicator's charting. So it is not applicable really for this indicator. So everyone, that's all from my side for today's session. If any of you have any query or any idea to share, you can write back to me in the feedback section and I would be more than happy to take the discussion forward. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there too. For trying out this newly released trading platform, the link has been provided in the bio. So give it a try and let me know how it works out for you. That's all from my side for today's session. I will be back tomorrow with a new indicator, new formation. So do come back and we will have a informed trading discussion about the trading strategies using a new indicator.